New subsection, simple trend lines. Well, they're diagonally drawn. Demand lines from the lows and supply line from the highs. So demand lines we will draw from lows to the highs, and they act as support. Okay, and supply lines we draw from the highs downwards, and the supply line acts as resistance. So we'd have price respecting this level, and we'd have demand pushing up and would respect this level. We have the flip side use. There's a personal nuance that I like to use. It's relatively unheard of in the trading world. Not to be confused with a reverse use of trend line, which we'll cover later. All these terminologies and name throwing may sound extravagant, but this is relatively simple in terms and form. This is a relatively simple form of analysis. However, it does provide good data, and obviously provides us with an edge that we must know. You shouldn't be underestimated. And it also, from simple trend lines, we can also gauge momentum, the sentiment of the market, which is very useful. And we determine this from the angle of ascent. So, say we have a demand line here, and then it changes ascent here, and we change its ascent here, which means price respects here. Then it starts respecting here, and then it starts respecting here. This means, it's becoming parabolic. Buyers aren't able to sustain buying that steep. Okay, so it gives us warning for potential climatic conditions. We'll go through that. Okay, excellent. So let's go to our study. So we have a new subsection, supply line study on the Euro futures, spanning 5 days using 15-minute bars, 15-minute time frame. So from this high, when we have an adjoining high or an adjacent high, we would draw the lining as it breaks a previous low. So when we get down to here, I would draw this level in, and it doesn't really help. We get a bit of price containment here, it holds here, but ultimately it fails. No problem. And then let's call this A, this point B, and this C. As we get to here, what do we know? We have 1, 2, 3, 4, 5, 6, 7 or 8 touches. So I would be aware of this level, and I may even draw the level in. But the correct way is as we break, here, then I would draw this level in. And what do we know as we come down? We break this little level of support. Good price action. So it validates this move as we're coming down. So as we come down, we make lower lows, we find support. Now, isn't this bar interesting? Pushes up to reverse and close firm. First question, you're probably thinking, would we delete this line? No. Why? Because it contains price. Okay, don't forget, we push up, then it reverses to close on its lows back under, the close is here, back under the supply line. This in itself is a form of validation. It contains price, and if anything, this is a sell signal. It's a strong sell signal for sure. Clearly this must be some form of data release for this to think about what's happening here. We push up, then we come back down, we close under, and then we break to make a lower low. So although it's been violated, price is contained. And the idea of a supply line is for supply to emerge. And it did in a very big way. So therefore, this level has to be kept, not only for the touches, because this validates the level. I hope that makes sense. Good. And then we come to this bar itself, and we can draw many lines. The first line is very small, it's very dotted, and this will be drawn as we break this low. Now, it doesn't really help us But if we think in multiple time frames, we could say we recognize this weakness and we come back and we close here, and we can enter on a 3 minute, 5 minute or 2 minute time frame. Don't forget, this is 15 minute. This is 15 minute structure, and if we enter on a 5 minute, 2 minute time frame, when we part trade through this level, we may want to take partial profits or fully liquidate our positions. So in a sense, or in effect, it does help. And then we can also draw from here. As we break this little low here, this doesn't serve us at all, but still we drawn because we don't know it's not going to help. And as we come down here, so when we break these lows here, touch here, this level will be drawn. Okay, I'm thinking of this level when it touches here and we start coming down. The correct use is when we break a previous swing low. And again, it doesn't really help us. So from here we rally, and wow, what happens? Our level holds, our supply line holds, resistance holds. I mean, isn't this fascinating that this level holds? You know, although it's only a 15-minute time frame, how long's this been? A day, day and a half, so 15, that's 4 bars an hour. That's roughly 130, 140 bars from here. And yet we violate it, come back down. First chance we have, respected. Absolutely fascinating. We come down. What do we have? As we're coming down, first thing we notice, price can't touch the supply line. So we look for other areas. You know, we were always looking for structure. We're always looking to draw new lines. And the reason why we can't touch is because the selling pressure is stronger than we expected. So we look for alternatives. And we note this high here. Then this here we wouldn't really draw in until we break here. So we would draw this line in. As we break, as we're coming down and price breaks here, we would draw this line in. We move down, note the price action as we break this little level here, widespread, validates. We go sideways, we'll come back up, and the supply line holds, 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 and we come down to make a slight lower low. Now, not all supply lines are going to help us, but we need to be aware. We need to be able to see structure and apply structure correctly. Then we halt and we trade sideways. And what happens is, don't forget, this level will be drawn in now. So we broke this low, this level will be drawn in. What happens? We get this our third touch and boom, it holds. And this propels the market down. We're making lower lows. Fascinating, right? So we find support. Trade sideways, we come up, tries to hold, we break, we have a nice little spread there, closes firm, and then what happens? The supply line acts as support. Now, isn't that interesting? This is a subtle tell that demand is coming in the market. There's two subtleties here. First of all, one, we break the supply line. This hasn't happened for 3 days. So we break BD, we break the demand line. Second of all, as we break, we come down, and then this acts as support, and we rally in to new highs. Okay, so we have support. So that's 3 things, and we rally in to new highs. So we have a high, 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 low, and a lower high. And we have broken the supply line and acted as support. So this here, this supply line has now acted as support, is the flip side use. So what is the same as support and resistance. What was once resistance now turns into support. And this is a very niche, subtle use of supply lines, simple supply lines. and it also works for simple demand lines. I mean, it's very powerful stuff. But why should this level hold here? You know, there's no support anywhere. You know, there's no reason for it to hold. So this tells us that people are looking at this level. The only way that holds is because people have that line in. Agreed? Has to be. So if other people or professionals look at this, we need to be looking at this level. The flip side use of the supply line. Break supply line, holds a support, rally into new highs. Very important data. If we're short and we see this, we may want to liquidate. We may want to take partial profits here for obvious reasons, or we may want to look for potential long plays. You know, this would be in our first target, which would be our major supply line. Like here, there is a potential long play here. What's this? A spring. You know, we come down, narrow spreads. What does that indicate? Lack of selling pressure. What's our story here? Here, we may be accumulating. Why would I say that? Well, because we broke the supply line. And then the supply line acts as support. And then if we take the trade, we put this line in. What's our first level of resistance? Our first target, our second target, our third target. If we have any more targets, if we have any more contracts left, then we can see this close above the supply line. We want to hold. Why? Because we're going to think it's going to take off. We don't know that price is going to stall and then reverse back down. So the response from down here is amazing. We take off, breaking the supply line, and we look at the close of the bar. It's just above the supply line. It's amazing. It's very strong behavior. Now we're thinking, you know, sky's the limit. We're going to rally to contest the highs up here, but, and it's a big but, there is no follow through from this buying. If anything, it's weakness. Look, supply, and then we get all, you know, for, you know, it's 15-minute bar, so just for an hour and a half, there's chop with evidence of selling. It's hidden up first, and then we come down, good spreads, weak rally, top reversal. Then we come down, close back under our supply line. And what happens here is trying to, look, we get a small rally, it's trying to hold, you know, the buyers are trying to hold here, but the sellers are having none of it. Boom, we slam right down. Isn't this fascinating? Then we trade sideways, come back up, boom, and it holds. I mean, this is a 15-minute chart where the simple supply line has held for 5 days. That's hundreds of bars. It's very, very useful. And of course, now that we're experts in horizontal support and resistance, okay, we can draw a line in here. And what's this? An upthrust, a sign of weakness in itself. We're in a downtrend. Okay, we're coming down. Ergo, a supply confluence. We're going to go into confluence today, but we have resistance here and resistance from the slide line. That's called a confluence. Plus the upthrust. Look at the response. Good wide spreads. That's a very high odd setup, which we will discuss later. Truly astonishing. So let's wrap up this chart. The importance of this chart, first, is to highlight how we draw the lines, and of course to illustrate that not every line helps us. But secondly, the violation. Many traders would delete this line because we violate it. It confirms, for us, it confirms the channel as it contains price. The supply line does its job. And here, the supply line works very well for a number of reasons. Not only do you get a trading opportunity here, even if you don't get in this action, it's very important because of the flip side. The fact that we're holding here and we rally, and the break of the supply line tells us something's going on, something's different, like something's different. And of course we draw this in and we see the spring. It gives us a license to take the trade. Okay, and all of this occurs from the use of this line. If this line isn't constructed, we don't see the break. We don't hold the flip side. Okay, it helps to give us a story of strength that we wouldn't have had, and this is how we use structure. I mean, we haven't even begun to use price bars and volume. This is very powerful stuff. This is how we use structure and why structure is important. It's the data that we obtain from it. Good. Are there any questions? Would you draw supply lines from the large violation and last resistance hold? Why did I break from that? Large violation and the last resistance. What did I draw? Oh, yes. Yes, I would. From here, so this is our low. From here, as we come down, this level will be drawn, and this is actually a trend channel, which we'll go on to shortly. So yes, that will be drawn. And from here, when we break this low, I'll be trying to find a best fit here, and it would either be here or, well, yes, it would be from here for a channel. Good question. So I mean, there are I would be drawing hundreds of lines all over this chart. I didn't keep them in because I don't want to confuse you, or I don't want to confuse the study. As this study is literally just for supply lines. But don't worry, we have a study at the end, which is Apple stock, that spans years, and it's on a daily time frame, and all structure is drawn, and it's a very, very interesting study, as we can see that professionals use structure. Why? Because they gap over important areas. I think that's our last study. It's the amalgamation study for today. Good question. How do you trade supply lines? How do you trade supply lines? It's a very expansive question. I mean, this, to me, in this violation we come under, is a no-brainer. If we see this occurring, again, I'm using multiple time frames. This is 15 minutes. If we can see this come up, and we see, buying bars like this on a 2-minute time frame, and then we can slam back down here, and as we start trading under here, and we can see the volume increase, we know now that's fake. It's a fake break of this area of structure. We want to get short. Yeah, it's a very expansive question. You will learn. I mean, at the moment, what we're doing, we're starting off by using structure. You need to know how to apply it correctly and begin to read what's happening at structure, what's occurring, what data. Are we making lower lows from support and resistance? The angle of ascent, which is momentum. We use the price and structure. How can I put this? After we have studied structure and price bars combined with the addition of volume, the core of our methodology is that we look at the price bar volume interaction at structure, and this is how we trade. We don't just trade structure because it hit, it's a touch and we hit. We still need confirmation, which we will go into when we get to the price action and the volume and the bars. We need to see negativity. Sorry, I can't give you a definitive answer. It is a very expansive question. But by the time you completed this course, these next few weeks pass, you will know how to trade the interactions at structure using bars and volume. Good question. Any further questions before we move on?